Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 10th of December. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, the Federal Reserve is expected to cut interest rates, but investors wonder what the central bank will do next.
France's National Assembly narrowly approves social security legislation in a win for the government.
Plus, Australia implements a world-first social media ban for under-16s.
Let's start with a roundup of our top stories.
Federal Reserve officials are expected to deliver a third consecutive rate cut later today, but concerns about inflation and differing views on the Fed's board will probably prevent Chair Jerome Powell from signalling any further moves early next year. Several policymakers believe rates are already at a neutral level, which neither spurs nor constrains growth. Chris Weston, head of research at Pepperstone Group, says investors aren't anticipating any significant developments.
The markets are not expecting fireworks from this, and I think it's so conditional that the rate cut's priced in. Everyone's positioned for this hawkish cut, and there's going to be no changes to SCPs and stuff, various factors. So, I think as long as they're open-minded to further cuts if they're needed to happen, then I think we're okay with that situation.
Pepperstone Group's Chris Weston was speaking as Wall Street traders have put off placing big bets as they wait for clues on the Fed's path for next year. Money markets are now pricing in only around 2 cuts in 2026.
France's National Assembly has approved a social security bill for next year, marking a win for the government. 247 lawmakers voted for the proposal and 234 against. After a final vote by the Senate, it will suspend President Emmanuel Macron's pension reform, a key concession to the Socialist Party. Speaking before the decision, Jefferies economist Modupe Agbembo says the future for the French economy is still precarious.
Going forward, we still have this uncertainty, and that's why we remain negative on the French outlook, because even if we limp forward, these underlying structural issues remain there, and also it means that the kind of fiscal consolidation that France needs to deliver is becoming a lot more challenging.
So that was the Jefferies economist Modupe Agbembo speaking there to Bloomberg Television. Adoption of the social security bill makes it more likely that lawmakers will pass a new budget by the end of the year, which Parliament will start debating on the 15th of December. The vote will also temper opposition calls for Prime Minister Sébastien Lecornu to step down. Both his predecessors, Michel Barnier and François Bayrou, were ousted over budget disagreements.
Australia's social media ban for young people comes into effect today in a landmark move designed to shield minors from harmful online content. The law mandates apps such as TikTok and Instagram to keep under-16s off their platforms or face fines of up to $33 million. Bloomberg's Freddie Fulston has more.
It's D-Day in Australia. That's deactivation day to you. And policymakers around the world are watching. Australia is the first democracy to enact such a crackdown on social media. But will it work? A survey of more than 17,000 young Australians found that only 6% think the ban will be effective. But Australian Prime Minister Anthony Albanese told reporters it's a profound reform which will continue to reverberate around the world in the coming months. In London, Freddie Fulston, Bloomberg Radio.
President Trump has said that Russia is in a stronger military position in its war on Ukraine as he took aim at European leaders for what he sees as excessive dialogue that has produced few results. The remarks expose sharply diverging positions between Europe and the White House on Moscow's position in the conflict. Here's part of his exchange with Politico's Dasha Burns.
It's not easy with Russia because Russia has the upper hand, and they always did. They're much bigger. They're much stronger in that sense. I give Ukraine I give the people of Ukraine and the military of Ukraine tremendous credit for the, bravery and for the fighting and all of that. But, at some point, size will win generally.
President Trump there in an interview with Politico. With peace talks ongoing, President Trump has appeared increasingly sympathetic to Moscow's demands, largely shutting out Western allies from his diplomatic efforts to broker a deal. Last week, a US national security document signed by the president said European governments hold, quote, unrealistic expectations for the war.
HSBC's CEO Georges Elhedery says not enough executives at the bank were fully accountable for their performance before he began his radical restructuring of the lender 15 months ago. Since taking the helm at Europe's largest bank, Elhedery has nearly halved the size of its operating committee and scrapped the co-management roles, which he thinks allowed bosses to avoid taking responsibility for their decisions. He's been speaking to Bloomberg's Leaders with Francine Lacqua.
We moved from 0% single accountability, everything had dual or multiple accountability, to now about 60% of our revenue is generated under single accountability. And then the last thing, Francine, is to be patient, because we're not solving simplification overnight. It's going to be a journey, and we have to be relentless at that journey, quarter after quarter, month after month, until we get the desired outcomes.
HSBC's CEO Georges Elhedery speaking on an upcoming episode of Bloomberg's Leaders with Lacqua, adding that the rollout of AI to the bank's more than 200,000 workers was well underway. It comes as the lender has relocated several managing directors from London to the Middle East, replenishing its ranks in a region earmarked as a priority.
Now, here in the UK, Chancellor Rachel Reeves will face questions from MPs today over her budget. Her appearance at the Treasury Select Committee comes after analysis by the Bank of England showed measures in the plan will lower the annual inflation rate by up to half a point from the second quarter of next year. The Bank of England's Deputy Governor Claire Lombardelli says the budget suggests a slightly looser fiscal policy that will provide a small 0.2% boost to UK GDP in 2027. Now, the initial assessment may feed into the Bank of England's interest rate decision next week. Meanwhile, a separate report from the Home Office estimates that restrictions on legal immigration into the UK announced by the government this year could hit the economy by almost £11 billion. The Home Office has a base case of a cost of £5.4 billion, but it said that the changes would be balanced by potentially significant unquantifiable benefits. Those are our top stories.
On the markets this morning, the MSCI Irish Pacific Index 0.2% higher. Eurostoxx 50 futures are 0.2 lower. Ahead of the Federal Reserve decision, the 10-year Treasury yield down a basis point at 4.18%. But those yields have been rising in recent days. The Bloomberg Dollar Spot Index just a touch weaker. The euro is trading at 1.1631.
In a moment, we'll bring you more on what to expect from today's Federal Reserve decision. Plus, look at reaction to the first day of Australia's social media ban for under 16s. But then something else has caught my eye this Wednesday, midweek maybe, thinking about our ageing populations and retiring later. Our opinion columnist Geroid Reedy has been writing about the experience of older workers in Japan, maybe something we can learn about here in Europe.
Yeah, so the system in Japan is a bit different in that there is no mandatory retirement age, but there is a system which allows companies to essentially force workers once they hit 60 onto less well paid, less secure contracts. And the issue is that you end up with workers who are still in the workforce, but being less productive, earning less, and not able to claim their full state pension until age 65 as well. I mean, there's plenty of counter arguments as to why the system needs to change. People are living longer, they're more healthy into later life as well. Take, for example, Sanae Takeichi herself, 64 years old, often convenes meetings with advisors at 3 a.m. to discuss policy issues as well. Some companies are changing growth rights in this piece as well, but he points to OECD calls for bigger changes in the retirement system as well. This is perhaps, Caroline, an insight into the debate to come in Europe. We're watching what's been happening in France, where actually lawmakers have voted to hold the retirement age lower this morning too. But as populations age, we know that these cohort of workers are going to be much more important to the general economy. What sort of system do we need to be preparing for?
Well, listen, I think that debate has already started. I mean, look, the mandatory default retirement age in the UK was 65, and that was scrapped well over a decade ago. 10% of people over 66 have continued to work, although the majority of them are kind of in higher-end, professional, managerial type occupations. So, of course, there's a difference between kind of forced to work and want to work. But I think the debate about working much, much later in life and kind of longevity is well and truly here already.
Yeah, we're one to watch with interest. We'll put a link to Garode Reedy's piece in our podcast show notes. You'll find it at bloomberg.com/opinion as well. Well, let's bring you more in today's Federal Reserve decision. We're expecting a cut for the third meeting in a row, but questions of where the central bank goes next. We have our markets reporter Valerie Teitel with us for more. Val, the Fed's already cut by 1.5 percentage points over the last 15 months. How much further can it go?
Well, look, that's a key question here. You know, the guidance going forward and how strong can the guidance be given we're still in a data backlog. We're still waiting for November data. That October data went largely uncollected. So we're still kind of flying blind into this Fed decision. So the guidance is going to be a key part of it. But one thing that has been shifting in the markets lately is the market has been pricing out the extent to which they will cut next year. We're now only pricing in 25 basis point rate cuts in 2026, 50 basis points of cuts. Now, that has to be said within the context that we've had a raft of more hawkish central bank repricing. Give it the hawkish RBA yesterday, the hawkish repricing around the Bank of Japan, and we're now expecting them to cut next week and one more time next year. Even add the ECB into that now. We have a shred of a chance that they will be hiking rates by the end of 2026. So a lot of this is taken into the global context that essentially the neutral rate or the terminal rate has been shifting upwards in the last few weeks, but it does, I guess, cause some issues for the Fed today because they are widely expected to reduce interest rates. But again, there is going to be a huge debate on what will the committee look like going forward, given we've had 5 of the more hawkish members express disagreement with lowering interest rates today. Today is really going to test Powell's ability to form a consensus on the committee. Now, note, Caroline, this is something he's been very successful at during his term as Fed chair, but today is really going to be a test of that kind of strength from Chair Powell.
But the shadow of Hassett surely is looming. White House National Economic Council Director Kevin Hassett, who's the front runner to run the Fed next year, and he says that there's room to cut.
So again, this is another thing that's been complicating the Fed, the political pressure overhang. We've heard from Kevin Hassett and a few times over the last week when he's become the real front runner for the Fed chair come Powell's stepping down from that position in May of next year. We even heard from Trump himself. He had an interview with Politico where he was essentially asked, what's the litmus test for the Fed chair? Is it cutting interest rates immediately? And he said yes. So there is kind of a dissidence between the more hawkish pricing that the market has been shifting to in the last few days within this backdrop of the Trump administration still wanting a Fed chair to cut interest rates pretty decently next year. So one of those is going to be right. I think we just have to wait a few more months until one of them comes clear.
Okay, Valerie Teitel, our markets reporter. Thank you.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now, Australia's ban on young people having certain social media accounts takes effect from today. It's the first of its kind, designed to keep under 16s off platforms including TikTok, Snapchat, Instagram and YouTube. And the world is watching. So let's bring in Bloomberg opinion columnist Catherine Thorbeck for more. She's been writing about this story. Good to have you on, Catherine. Firstly, just remind us, how did this law all come about?
Yeah, this legislation, which, as you mentioned, goes into effect today, was actually introduced about a year ago. And I'll be honest, I've been a bit of a skeptic since day one. There's all kinds of reporting about how it came about and who backs it. News Corp actually ran some very aggressive campaigns supporting it. But I think there's definitely been a lot of growing pressure globally for big tech to do more to protect its youngest users. And I think that's something that parents and caregivers feel very deeply. And you know, we can all get behind that. And, you know, we've all heard these very devastating stories of youth mental health problems linked to social media use. And Washington really hasn't moved on this front. I mean, they haven't passed any comprehensive online child safety regulation in decades. So Australia says they're really hoping to lead the world here.
What are the tech companies saying about this? How are they responding to the fact that many under 16s won't be able to use their platforms?
So it's really no surprise at all that tech companies have pretty strongly resisted this. They obviously don't like being regulated, but they have all even sort of belatedly come around and they are complying. And I do think that it's a good thing to sort of put Silicon Valley on notice like this. I don't think that parents and caregivers can carry this burden alone. So it does sort of give Silicon Valley the choice of whether to protect more young users or lose them. But in terms of the workarounds that you mentioned, I mean, how viable and how feasible this ban will actually be is a big question.
Yeah, indeed. And so I suppose that's why I want to ask you why you're a skeptic in terms of who's in, who's out. There are a number of apps that are included in this ban, but young people can still see what's on them. They just can't have their own account. What governments do you think are going to be watching this closely? What do you think they're going to be trying to take away from the lessons in Australia?
So one thing that I think is interesting is that 3/4 of 9 to 15-year-olds, according to an ABC poll, said they had no intention of stopping their social media use once the ban kicks in. And we know how tech-savvy young people are. Ahead of the ban, they were sort of encouraging each other to congregate on even more obscure apps, which kind of raises the question of what could go wrong when swarms of underage users flock to even less regulated corners of the internet. So I think that there are a number of questions that we have to figure out here. But I do think that the more global momentum this ban gets, I think the better. I think it really does it really is a wake-up call for big tech that the status quo is not tenable.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.